Hello everyone, welcome to Doctor's Academy for Taxation and Accounting. So far we have discussed the major deductions, that is depreciation, investment allowances, set off of depreciation, T development account, specified business. All that we have discussed in the previous videos, and through this video let us try to explain the deductions under section 35 CCA, 35 triple C, 35 CCD, 35D, 35 DD, 35 DDA and 35E. Section 35 CCA deals with payment to Rural Development Fund. Section 35 triple C deals with expenditure of Agricultural Extension Project. Section 35 CCD deals with expenditure on any skill development project, and section 35D deals with amortization of certain preliminary expenses, and section 35DD deals with the expenditure for amalgamation and demerger of an undertaking. Section 35DDA deals with the expenditure on voluntary retirement, and section 35E deals with expenditure on prospecting etc. for development of certain minerals. So each one of these we will deal in detail, its theoretical part and the deduction eligibility if the assessee is having such kind of a business. So the first one is payment to Rural Development Fund. Under this section, 100% deduction is allowed to an assessee who pays any sum to the National Fund for Rural Development, which is set up and notified by the central government in this behalf. Second one is the National Poverty Eradication Fund, which is also set up and notified by the central government in this behalf. The second one is expenditure of Agricultural Extension Project, section 35 triple C, where an assessee incurs any expenditure on agricultural extension project notified by the board, there shall be allowed a deduction a sum equal to 150% of such expenditure, but with effect from assessment year 2021-22, the deduction eligibility will be 100%. The third case is expenditure on skill development project as per section 35 CCD, where a company incurs any expenditure excluding cost of any land or building on any skill development project notified by the board, there shall be allowed a deduction of a sum equal to 150% of such expenditure, but with effect from assessment year 2021-22, the deduction will be 100%. The next case is amortization of certain preliminary expenses as per section 35D, where an Indian company or a non-corporate person resident in India incurs any preliminary expenditure of the nature specified below, the assessee shall be allowed a deduction an amount equal to 1/5 of such expenditure for each of the 5 successive previous years, beginning with the previous year in which the business commences or the extension work is completed or the new unit commences production or operation, as the case may be. So as per section 35D, the amount incurred as preliminary expenditure shall be absorbed in 5 equal installments in the year in which the business commences its activity. Such preliminary expenses shall be absorbed in 5 equal installments in the successive 5 previous years. While computing the preliminary expenditure, the following expenditure shall be included: A. Expenditure in connection with the preparation of feasibility report and preparation of project report. and conducting market survey or any other survey necessary for the business of the assessee, and engineering services relating to the business of the assessee. And also it could be included the legal charges for drafting any agreement between the assessee and any other person or any other purpose relating to the setting up or conduct of the business of the assessee. It's a company. In addition to the above expenses, the following expenditure are also included in preliminary expenses, such as legal charges for drafting memorandum and articles of association of the company, printing charges of the memorandum and articles of association, fee paid for registering the company, expenses regarding issues of shares or debentures of the company, including underwriting commission, brokerage, and charges for drafting, typing, printing, and advertisement of the prospectus. And next point says, such other items of expenditure as may be prescribed. All these expenses could be included in preliminary expenses, and that could be divided into 5 equal installments and could be absorbed in 5 successive previous years. The maximum amount eligible for deduction under this section shall not exceed 5% of the cost of the project, or if the assessee is an Indian company, at the option of the company, 5% of the cost of the project or 5% of the capital employed in the business of the company. So here the cost of the project means, in the case of expenditure incurred before the commencement of business, the actual cost of the fixed assets being land, buildings, leasehold, plant, machinery, furniture, fittings, and railway sidings, which are shown in the books of the assessee as on the last day of the previous year in which the business of the assessee commences. In the case of expenditure incurred after the commencement of the business in connection with the extension of his undertaking or in connection with his setting up of a new unit, the actual cost of additional fixed assets acquired or developed in connection with the extension of the undertaking or the setting up of the new unit of the assessee, and which are shown in the books of the assessee as on the last day of the previous year in which the extension is completed or the new unit commences production or operations. Here the capital employed means, in the case of expenditure incurred before the commencement of the business of the company, the aggregate of the issued share capital, debentures, and long-term borrowings as on the last day of the previous year in which the business of the company commences. In the case of expenditure incurred after the commencement of the business of the company in connection with the extension of its undertaking or the setting up of a new unit, additional capital raised by it for this purpose in the form of issued share capital, debentures, and long-term borrowings as on the last day of the previous year in which the extension of the undertaking is completed or the new unit commences production or operations. Long-term borrowing is any money borrowed by the company from the government or the Industrial Corporation of India or the Industrial Credit and Investment Corporation of India or any other financial institution which is eligible for deduction under section 36 subsection 1 clause 8 or any other banking institution, or any money borrowed or debt incurred by the company in a foreign country in respect of the purchase outside India of capital, plant and machinery, where the terms of repayment thereof is not less than 7 years. Here the interest income from share application money shall be set off against public issue expenses. Next is expenditure for amalgamation or demerger of an undertaking as per section 35 DD, where an Indian company incurs expenditure wholly and exclusively for the purpose of amalgamation or demerger of an undertaking, it shall be allowed as deduction 20% of such expenditure for each 5 successive previous years, beginning with the year in which amalgamation or demerger takes place. Next is expenditure on voluntary retirement, that is as per section 35 DDA, where an assessee pays any sum to an employee in any previous year in connection with his voluntary retirement. He shall be allowed a deduction of 20% of such expenditure for each of 5 successive previous years, beginning with the year in which the expenditure was incurred. The deduction shall not be allowed to the amalgamating company or to the demerged company or to a firm or proprietary concern in case of succession, or a private company or unlisted public company is succeeded by a limited liability partnership for the previous year in which amalgamation or demerger or succession takes place. However, the deduction shall be allowed to the amalgamated company, resulting company, the successor company, or the limited liability partnership on fulfillment of the conditions under section 47 clause 13b in the same manner as it would have been allowed to the transferor of business. The next is expenditure on prospecting, etc., for development of certain minerals as per section 35E, where an Indian company or any other non-corporate person resident in India incurs any expenditure wholly and exclusively on the prospecting of any minerals or in the development of mines or other natural deposit of any such mineral, the assessee shall be allowed a deduction of an amount equal to 1 by 10th of such expenditure for each of the 10 successive previous years, beginning with the year of commercial production. The expenditure should have been incurred during the 5-year period ending with the year of commercial production under specified heads only. For deduction, least of the following shall be allowed: an amount equal to 1 by 10th of the total expenditure eligible for deduction under this section, or such amount is as sufficient to reduce to nil the income of the previous year arising from the commercial exploitation of any mine or other natural deposit in respect of which the expenditure was incurred. Carry forward of unabsorbed amount. If any year the profits are insufficient to absorb the amount of the installment, that is the 1 by 10th, relating to that previous year, the unabsorbed part of the installment shall be carried forwarded and added to the installment of the following year and so on for succeeding previous years up to the 10th previous year, commencing from the year of commercial production. For both the cases, as per section 35D and 35E, audit of accounts is mandatory, where the assessee is a person other than a company or a cooperative society. Deduction under section 35D and 35E will be allowed only if the accounts of the concern are duly audited by a chartered accountant and the assessee furnishes electronically along with the return of income for the first year in which the deduction is claimed. The report of such audit in the prescribed form, that is in 3AE, duly signed and certified by such accountant, shall be submitted for filing of return. Then only he will be eligible to get deduction. Hope these points are clear for you. Once we complete this theory part, we will try to work out problems. So if you have any doubts, kindly write it in the comment box. Thank you very much for watching Doctors Academy for Taxation and Accounting. If this information is useful, kindly share it and forward it with your friends and others in your contact. Thank you very much.